In this episode of Net Lease TV, we interview Ted Downing, TD Commercial Group and Net Lease World, Keith Stern, Upland Real Estate Group, Evan Lyons, Tolson Enterprises, and I'm the mediator, Chris Marabella, this Wednesday, March 9, 2022. Enjoy. Hey guys, welcome back. Net Lease TV All-Star event. It's Wednesday, March 9th, 2022. A lot of things have gone on since our last All-Star event. We see a war here, Russia and Ukraine. Coronavirus, Omicron is over, so we're glad about that. Price of oil hit a whopping 126 today, up from 90 in February. We got the 10-year Treasury at 191, up from 153 as of March 9th. Right now, the Dow, as of today, Wednesday, March 9th, is up 625. NASDAQ's up 395. Oil futures, I believe, are going down. Iraq and UAE is saying that they may increase output with OPEC. OPEC may increase output, and Zelensky may do a condition with Russia to end the war. So a lot of things are going on, and this is a timely event. We got tax season right now. I'm going to go see my CPA after this, finalize my personal and federal tax returns. So there's probably a lot of 1031 buyers meeting with their CPA. Keith, is this a great time for a 1031 buyer to start to strategize with their CPA on a 1031 exchange?
Yeah, absolutely. It's time to start is now, before you have an exchange and before you have the need. And so it's very valuable to meet with your CPA, understand what the rules are, get that person on your team. So when a chance comes up to do an exchange, the client understands it. They can work with their CPA and hopefully work with their attorney and put a good team together with a great broker. And when they do have a property they're selling, use a great broker. And then when they're buying a property, use that broker also. So yeah, now is the time to prepare for the future and for what's going to be coming ahead in their own personal planning.
I always learned that, and I always tell my clients, Roger Staubach, you guys know Roger Staubach, he did a lot of CVS deals, credit tenant lease. And I read his book, and what he said is before they would go and play the game with the Dallas Cowboys, the game is won before the game is played. So he would start to strategize, and they would see all their plays, and by the time they got on the field, they knew exactly what they were going to do. And that's the same with the 1031 exchange, right? It's really important that you work with a guy like Keith or Ted and getting everything kind of coordinated, and myself on the financing. That way you can hit the ground running, because you're going to have a very short fused time frame to ID 3 if you're going off the 3 property rule. You got 45 days and then another 135 days to close. And that goes really. Hey, this is Chris Marabella, Commercial Finance. It's Monday, March 7th. Capital market update. 10-year Treasury at 179. We're still right around 3 to 4 3/8. We just closed a Walgreens refi transaction and a Jack in the Box. Both of those transactions were in the mid to high threes. Call me if you require net lease financing. 760-803-6464. 760-803-6464. Thanks. And that goes really quick. Now, this is for both Keith and Ted, and then we'll get to Evan. What I found for the 1031 buyers, follow-up is really, really important, right? What happens is you really need to find out when you're putting in offers, if they've got other offers on the property, when that sponsor, whatever you want to call it, when they're going to go hard on the due diligence and the financing. That way you can kind of keep track and call that listing agent back to see if that property fell out, right? So you're in second position if it's a property that you really want. Ted, do you have anything that you want to mention on that accord?
Yeah, with the market being so tight and no supply, I always recommend putting in a backup offer. But with the broker relationships, the world's a lot smaller, like with the deal makers in this industry. So if we're in a backup position, I'm going to let that broker know. I don't want them tying the property up and expiring their listing and ruining that for future negotiations. So, I manage expectations with that if that's the case. So
how do you?
It's always a good idea to have a backup offer.
Okay, so how do you know I'm a buyer and I make an offer on a bunch of different properties, and you guys tell me, oh, it's gone. You're a listing agent. You tell me it's gone. I'm under contract with another guy, and the due diligence is up in 10 days, but this is one of his other 3 that he's ID'd. How do I know that property, he's not going to go for it because he's ID'd 2 other ones? and that property may drop out. Keith.
Well, that is the magic of being a good listing broker, right? Because you're going to ask tough questions to these buyers. Find out if you are the first choice or the second choice or the third choice. So it's about communication. It's okay to be the second choice or a backup offer. And lately, we've actually put some backup offers in play, which has not really happened until recently for us, frankly. But what's happening is that market's moving so fast, products moving so fast that these buyers need to have backup offers, and so do the sellers. You gotta protect your backside per se. The job of the broker is to make sure that we put the best offer in front of the seller, so the seller hopefully gets to a closing. But things happen, right? Things happen throughout the process, and so it's good to have some backup guys in play just in case.
So Keith and Ted, and then we're going to get to Evan here in one sec. What I like to do on the financing end is collect their taxes, right? Their tax returns right now would be for 2018, 19, 2020. We set up a Google Drive. They can upload the taxes. We send them a DocuSign for their PFS. That way we got their personal financial statement. I know their adjusted gross income. Some of the lenders today go off a global. So what I mean by that, if you take all their money coming in, divided by all their money going out, they may want a minimum debt coverage of like 1.25. If they don't have a lot of adjusted gross income on their tax return, I really don't want to go with a lender like that. I may go with a lender that looks more at just the property. But that's the advantage of dealing with a loan broker. I kind of do like Expedia, depending on the use of the property, where it's located, what kind of loan structure, the credit quality of the tenant, the credit quality of the sponsor. Then we're going to basically do like Expedia and give the client a bunch of different options, and they can make the decision of which way we want to go. Then when we kind of zero in on the most appropriate lender for the use and what the sponsor wants to do, then we're going to straddle those lenders and try to negotiate on their behalf the best loan that mitigates their risk and kind of checks all the boxes for what they want to do. Evan, so now you made a jump. You're not an agent anymore. You're doing management. You're looking to buy deals. You're with a family office. Tell us about Tolson Enterprises. What's up with Tolson?
Sure. Yeah. So for those that don't know me, I was a broker for 10 years for Marcus and Millichap for 5, and then Encore Real Estate out of Farmington Hills, Southeast Michigan. I've done deals with these boys on the call today in the past, and I jumped mid-year last year to a private family real estate company based in Toledo, Ohio. It was a client I had sold deals to and for as a broker, and jumped over to the landlord side to keep the challenge going, keep on learning, help run some things here. So we manage, we have about 3.5 million square feet of real estate within a private family portfolio. It's retail shopping centers that are generally
Awesome.
shadow anchored off of 75, shadow anchored by Walmart, Lowe's, Home Depot, Meijer, that kind of thing. We own and operate about 25 storage facilities, which is our branded Lock It Up storage. We've got an industrial portfolio and office. So we develop projects as well. Development's become harder these days for sure, between supply chain, increased costs, and all that. So we're really looking for redevelopment projects rather than ground up. But the deals are out there when you align yourself with good brokers and you have a company like Tolson that does the things they say they will do, performs once the property's under contract. When you have a 1031 exchange, you don't tell 3 brokers that they're all the first deal in line to go under contract. Good deals do come around.
Awesome. So real quick, Keith. Evan, hold on one sec, Keith, and I'm going to get to you. Evan, what's your cap rate expectations? And Keith, ask Evan any kind of questions you want if he's listening or what the deal is.
Sure.
Well, let me ask first, because this is kind of that question. So we just put a storage facility on the market here like yesterday, and it is a unheated, garage door drive-up facility, and it's in north of downtown Minneapolis, kind of on let's call it 10 miles out of downtown. So it's a bedroom community, and my question is, where do you think cap rates are for that type of product today?
So this
250
is
units or so.
250 on what type of acreage, or is there room to expand that additional building?
No room to expand, but it's adjacent to retail development property. So I think the next use will be they'll tear it all down eventually and put retail, because it's kind of in the way of the expansion of the retail in the community.
Sure.
On a main road, by the way, it's off the main road with access.
And do you is it tied to a specific branded storage type, or can a user come in and rebrand that storage?
Yeah, it's owned by just an individual who put it up, so it could be rebranded.
Okay. All right.
And it's
Well,
not secure. In other words, it's the type of community people could just drive up easily, and no one's worried about getting the high security, no fencing, stuff like that.
Sure. So when we step in to purchase those properties, a lot of what we'll do is we'll call it Tolsonize it. We'll come in, we'll put the fencing, specific type of gating, front office, which we'll build out, and then we always look for room to expand. We want roughly 50,000 square feet of gross leasable, but I can tell you where we would want to purchase that, and then where in reality it would we'd get beat out. I mean, it's probably, depending on performance, let's assume it's good, and rents are in line with the market. I got to imagine it trades in the sixes. We'd love to see it low seven, mid sevens to be competitive, but that is, it's not. It may not be competitive, so I understand that. How'd I do?
Awesome.
Pretty good. We're listed at 575, and yep. We kind of expect it's going to sell between that and 6 is probably the number. But it's really, thank you for the information, because it's just kind of curious where that was at, and I think I didn't miss it by too much.
Yeah, the thing about storage right now is the marketplace is so tight. 5-7 years ago, finding that storage facility that has 3, 4, 5 buildings, which gives you proof of concept, and then land to expand upon that with storage under market, because it was some farmer that built these things out. Those deals were around, and those were the money machines, the money makers. But more and more people jumped into this space, much like the mobile home community space, and it's become tighter. So your 575, especially in a major market like Minneapolis, is I don't think you're off.
So let me just say one thing. We're always trying to come up with some information to give our people, our audience, a little advantage, and you guys as well. What I think is going to be hot, San Diego is going to boom. Okay, San Diego is a defense city, right? We've got Miramar Road, where Top Gun, right? You've got all the different defense contractors. I think like Raytheon Tech traded RTX is the ticker, Northrop Grumman, Lockheed Martin. All these defense contractors are going to boom. So I don't know if that's an opportunity for net lease. Maybe if they want to sell off like industrial space where they're going to be doing drones and all this GPS and whatever they do, weapons, planes. But I think that's an area with Ukraine. Defense could be a growth area. I think San Diego is going to boom. I think that's going to be a big stimulus for San Diego. We're seeing our real estate's gone up like crazy. And I think that's just one more leg. What are you guys seeing in your specific markets? We'll start with Evan. What are you seeing where you're at in your state and that in your city?
Sure. Well, I'll comment real quick on the defense thing. Those businesses are having a building with some type of government or defense-based contract is awesome. There's great credit, right? It's the single greatest bank ever. They have an unlimited balance sheet. But a lot of times you're going to have some form of early termination right that is 90 days, 120. Yeah. So I mean, even a lot of times the lender is going to look at that with a much shorter window. So that part can be tough. But hey, I mean, we own a couple Social Security Administration buildings. There's some things to navigate there. There's a good broker out of the Marcus & Millichap Columbus office that we like to tap for some info there. He focuses on government and Social Security buildings. So it's a weird world to navigate, but we own a couple government sites we like. As far as market, I would say, a lot of eyes were on Detroit. Through the for the last 10 years, really, there was billions of dollars invested in that market, huge growth. And the pandemic definitely set the city back at least a little. However, has had, I just read an article that said that really quite the comeback. New restaurants backfilling the old, development capital still flooding to the area. A lot of projects continuing. So I think that the major, we're in Toledo and then in Southeast Michigan. Those markets it's good Midwest markets. Keith can relate. There's yield in those markets for sure.
Ted, what's going on in Florida?
It's booming.
It is booming. That's what I've heard.
We moved here from San Diego 8 years ago, and prices have tripled. I just actually just sold my house and parlayed the money into an investment property because my house doubled in value over the last 5 years off market. Buyer came to me asking me if I would sell it. So then finding a replacement property for myself was difficult. So it's in all markets, but yeah, since COVID happened, I mean, Florida, we were closed down for about 2 weeks, and everything was open back to business. So everybody has seemed to move here. It's an average of 825 families per day since COVID started has moved to Florida, and I don't want to say it's amazing because we never had traffic here. Now I have traffic. I have to deal with like San Diego type traffic in South Florida. So
let me say this. This is kind of an interesting thing. Let's say that you own a home, right? And you own or occupy it. Now my wife gets 250 exemption and I get 250 exemption. So that's $500,000. If I have $1 million gain, I'm going to pay capital gains on $500,000, right? Now I think, and this is something we'd want to talk to a CPA and an accommodator, but then if you rent out the house for a certain period of time, it becomes a rental property that you can then do a 1031 exchange, and you're not constrained by that $500,000 for you and your wife. Have you guys looked into that, Ted?
Yeah, I have 3 1031 exchanges doing exactly that, and I have closed a buyer doing the same. So he had a house in the Hollywood Hills, bought it for $10 million, sold it for 17, lived in the house. Then he went and traveled the world for a year with his wife, ended up having twins on that trip for one year, rented out on Airbnb, rented it out to some different movie studios, and then 1031 exchanged and helped him buy a Walmart for 17. That was $18.5 million. So sold the house and then 1031 exchanged into a Walmart. So that's 100% feasible. And I'm helping a person right now who sold their house in the Hamptons, a vacation rental, and is trading into a couple Wendy's.
So there was in the Wall Street Journal today, I read when I was at Starbucks, I rode my bike down there trying to save money on the gas. But I read this hedge fund guy purchased a house or a condo in New York for like 90 to 100 million. He sold it for like 200 million. So if he owner occupied it, that definitely would be a guy that he would want to lease that before he sold it so he could roll that into a 1031 exchange. I think that's a huge, if you live in Beverly Hills, if you live in New York, any high-end area where you're owner occupying, you may want to consider that strategy where you move out and you rent that home and then it's redefined as an investment property, and you reach out to Keith or Ted and try to roll into a net lease deal eventually where you get the stepped up basis for your heirs if Biden or whoever doesn't change the tax laws. Keith.
I just have 2 comments on that. It's tough to find an $18 million property in Minneapolis or all of Minnesota. First of all. Second of all, I think out of those people that moved to Florida every day, maybe half of them are from Minneapolis trying to get out of this cold weather and down to hang out with Ted in beautiful sunny Florida. Minneapolis is coming back. Minneapolis certainly has had its challenges, with a lot of the things happening and rioting and things. But it's quieted down now. Downtown Minneapolis finally has some people around. I think the banks, the Wells Fargo's finally came back. U.S. banks finally came back, and our Skyway system, which if you guys don't know, is located on the second level of all the buildings downtown Minneapolis, and I can get about anywhere I want to go downtown indoors in heated or cooled space from anywhere, right? As long as you're in the financial district, get all the way to the Minnesota Vikings stadium, get all the way to the Timberwolves arena, and to really walk around everywhere downtown in climate-controlled area. Now, our vacancy has gone up with COVID, but it's going to come back. It might be a little slower, but it's going to come back. So Minneapolis is recovering too, and I think that's the good news. Maybe a little bit slower though than where you guys are at.
It may be good though. There may be more opportunity there for available net lease with the slower economy, right?
Yeah, the interesting part about it though is the suburbs have not changed as far as demand. So any net lease properties located in the suburbs will compete with any other Midwest companies in the area, any other states. So although you would think that those properties would have gotten maybe hit, they haven't really. There's just as much demand for those properties, and I think frankly it's because as we stated earlier, Ted stated earlier, that just the supply of net lease properties is way down comparatively where it was, and I think that's a lot of it's based upon COVID and the fact that developers just weren't developing retail properties throughout the area for all of 2000 into the beginning of 2021. So the supply may be constrained for new net lease properties, if you will. Is at a panel today on a different deal, and some people are predicting it might be 24 months before we actually have some more supply into the market, or any really substantial supply in the market, which therefore may if the demand stays the same and they keep selling those apartment buildings in California and in Florida and Michigan and Minnesota, and those 1031 buyers are still coming to the market. I don't know if cap rates are going to raise very much over at least the next 6 to 12 months. I think cap rates are going to be fairly steady, and there's always even if interest rates go up, and they seem to be going up. Chris, you can talk about that more I still think investors see, and this is a Marcus Millichap thing, right, that they track all the time. It's just the difference between what the interest rates are and what the cap rates are. I think over the last 10 years, they've been pretty steady. And right now, I think we're around that 2.3% to 2.7% difference between, you call it investors' return, right? So we might have a little bit of time here for interest rates to raise, but I think, if we get up above that, 3.8% is the number that I calculated here. If we get up about 3.8%, there's going to be very, a lot of pressure to raise those cap rates. Now, because of supply and demand, maybe that doesn't happen for 6 months to 12 months, but I think as long as that 10-year T-bill goes up and the interest rates keep going up through the lenders, I just have to think there's going to be pressure to move up those cap rates. Would you guys agree?
I heard, Keith, that cap rates are kind of sticky, right? Like if the 10-year note goes up, it takes 6 months. They're really sticky before those cap rates go up. Like right now, like if you're buying it at a 5 cap, and what did I just say? The 10-year T is at 191. You got a 310 basis point spread. You're saying that normally it gets going at about 380. Is that what you're saying? At about 380 basis?
Yeah, that's the interest rate spread between your cap, and so whatever that delta is between the two, or that gap is, that's what I'm looking at as far as the investor return or the gap, right? So right now, if all things are equal, we're interest rate at 3.8%, right? So that's all what we're hearing, and in our markets, you're plus or minus that. And Chris, you can comment better than I can, but if we start getting up about 4%, there's going to be huge pressure, I think, to move those cap rates up, provided that there's a substantial supply, which is the thing I think that's going to be the difference of raising cap rates or not.
Evan, I'll let you comment, but and what I want to know now is talk about 2 or 3 deals that you've done in the last 6 months. I'll talk about, I just closed the Walgreens and a Jack in the Box loan. The Walgreens, I'll talk about that first, and then we'll go to Evan. The Walgreens deal was with a repeat client that I worked with 10 years on another Walgreens deal. He had 2 CMBS loans. So what I recommended this time around is do a portfolio loan with a friendly prepay, like a 3-2-1 or no prepay. So if he wants to exit that deal, he's not locked in with like yield maintenance or defeasance. And we locked 7-year fixed, 30-year AM at it was like 390 something. And that deal just closed when I was in London last week. So we got that all done. And then I did a Jack in the Box deal with a repeat client. And that client, it had like 2 or 3 years remaining. And he had a very high net worth, the sponsors. And we did a 7-year fixed with a 30-year AM, 3 5/8. So we got him a really good deal on that repeat client. I'll have another Walgreens coming up with the same client I did the other Walgreens, and I got to start on that in around May, and that loan will be like 7 to 8 million. And I got to refinance again a CMBS loan, and so we already have a lot of loans booked because that was from 2011. We were just coming out of the recession. And so 9 was pretty slow. 10, there wasn't much liquidity, but 11, we did a lot of deals. Like I told Keith in 11, in fact, Keith and I did a Walgreens in that year. So all those loans are coming due. So either those people are going to refinance or they're going to sell. All right, Evan, go ahead.
Sure. Quick comment regarding what Keith was talking about with interest rates. I completely agree. And one thing you can look at rather than tracking the interest rate every day is the housing market. Commercial real estate tends to lag behind housing by 2 quarters, sometimes maybe it's 4 months, but I would say safely 6 months. Watch the housing market over the next 6 months. This, springtime's coming. Rates are increased for those people as well. And I think you're going to find that there's still a lot of people with a lot of cash and a need to move still, and they're going to take the interest rate out of the equation. They're still probably going to stretch, and it's going to keep housing prices higher. I think you're going to see probably the same thing with commercial. I could be wrong, but the point is the housing market's a nice indicator for what's going to happen in commercial 6 months.
Let me just say this, Evan. There's like 900 to 1 million homes on the resale market available for sale. That's why when something comes up, the prices just keep going higher. You've got tons of millennial buyers. The people that work for Google, Intel, Cisco, all these tech companies, Snapchat, and they all want to buy houses now because they're having children. So when a house comes up, there's 20 or 30 buyers. So there's very little supply in the housing market. But that's a good thing for existing owners because they can monetize their house and then go into a net lease deal, kind of like Ted's saying. But go ahead, Keith. Any deals you've done lately, and what's your feedback on the housing market?
So we've done a number of transactions. I think a couple of we just closed are some Sunoco properties out east, and interesting. People still get that oil and gas advantage on their taxes. It's a 15-year quicker depreciation schedule, and I think that ends at the end of the year. Check with your CPA, of course, on that one. Some people can take advantage of it depending upon your personal situation, but the oil and gas, the gas stations, the C-stores, the oil change facilities seem to still have some attraction for that reason. And we've done some dollar stores recently too. The dollar stores seemingly are still out there. They're easily accessible by most investors, and a lot of the credit is investment grade, so it's kind of the go-to. The challenge with a lot of the stores, of course, are their flat rents, and sometimes they're rural areas, but they still are very attractive to buyers. So just a couple deals we've done recently.
Ted, I know you always are closing deals. What are you up to? Are you representing buyers, sellers? What are you doing?
Record
Tell
month.
us about Net Lease World. I know that's a big new thing for your company, Net Lease World.
Yeah, Net Lease World, let's transact. So we've been working a lot of buy side these days with exchange buyers out of very large exchanges out of other product types. Like a lot of them are first time Net Lease buyers, but they sell 270 units in Santa Monica, and we just placed it was $74 million. They leveraged up. They got $92 million worth of deals that we got in contract right now. So just last week.
So you need to check out Ted's Net Lease World. It's www.netleaseworld.com, and there's a lot of good net lease properties there to look at that we would love to finance. We've got billions to finance net lease deals, so definitely come to us for financing. Who do you see selling these days? Is it family offices? Is it institutions? Who's selling the net lease properties today? Who wants to take that question? Ted?
We're seeing just a ton of private owners that are getting gobbled up by the REITs that are looking to deploy capital, or like people coming out of other product types into the net lease. Net lease has been super hot the last couple of years, and I only think it keeps getting hotter and hotter. So it just makes sense. It's easy. It's simple to go from a 100-unit apartment building to, like in San Diego, for example, and you've got and buy 6 or 7 Walgreens. You get your mailbox money, so it's easy to understand. It's gaining traction and more. It's in more conversations. So it's a simple sell. It's easy. It's wealth preservation. Everyone's made a lot of money over the last few years, the last decade, and they want to preserve it. So those are the kinds we're really working with, is more investment grade, wealth preservation type of properties.
Keith, what do you see? Who's selling net lease deals? Is it more institution, family office, REITs?
I agree with Ted. I think mostly it's individuals because they're taking advantage of all the money out there, and they're seeing these crazy prices. Not saying they're wrong, just they're saying high prices what they expected to get. So the individuals are very interested in saying, "Wow, I can get that. I'm going to sell." I think I don't see selling properties as much as the institutions because they have a lot of money to deploy, and selling the product they have just means they have to deploy more dollars. So I think the institutions are kind of holding on, and individuals are happy to sell if they can get their pricing. And it's got to give Ted a lot of credit if he found $80 million or $90 million of properties out there. That's not easy to do, particularly when you're living by the 3 property rule, right? How do you add up, 3 properties to get to 90 million if that's what you had to do? Maybe it was multiple sales and you're able to do that.
Yeah, there's multiple portfolio sales that we had to piece together from preferred developers. Had 11 7-Elevens that we did, 4 Red Lobsters, and then a small Wendy's portfolio. So it was a lot of moving pieces, but somehow we put it together. Our attention.
So let me just say this, Ted. If you're a developer, hold on one second. If you're a developer, hold your horses. Whoa there, boy. Go ahead. Okay, go, Keith. You're on. What? Go ahead.
I just want to clarify that, Ted, just to understand. So it was multiple sales, and therefore you're able to identify multiple properties, right? Because as you run into that 3 property rule, which I'm doing right now with an investor that's looking for the same dollar amount, I'm having the challenge trying to put 3 properties together that adds up the amount. You could do the other rule, the 90% rule, and close on 90% of the properties you identify too. So that's kind of the challenge, right? Is there another way of getting around that?
Well, I'm not a CPA, but the way I understand it from what they're telling us is it was a developer with one entity that owns 11 of the stores, right? So we took the 8 of the 11 that were available and bought that as one of the 3 properties, and then did the same with the Wendy's portfolio, and then what was the other portfolio? The Burger King portfolio. So it was 3 portfolios from 3 different developers that we paired together to get there. They needed to, it was $74 million is what they needed to replace, and then they just put marginal debt on it. went up to like, I think it's 94 million is what it's going to end up being. So we have all the PSA drafts out, and half of them are accepted in contract. So pretty good. That was a great client. You don't get those every day, but but we're seeing that. We're seeing a lot of these guys with very large like exchanges that just COVID scared a lot of people, and they're redeploying their capital out of California and into the net lease space or out of New York. We're getting a lot of clients that are coming from New York and California.
Yeah, California.
Great idea. I owe you a beer on that one, Ted.
Hey, yeah. Ted and Evan, California, I heard, was trying to do a thing where we can't run a credit report if you own apartments anymore. It's just crazy, what they're coming up with. So if you're an apartment owner, you just don't want to deal with this stuff. You want to roll into a net lease. It's probably a lot of older people are getting scared out of apartments and want to move that money east where they get higher cap rates in net lease and not have to deal with leaky faucets, deadbeat tenants, and tough situation with all this governmental change. Evan, what are some deals you've done lately, or what are some deals that your company has bought, and what do you want to buy? Like, what kind of deals do you want to buy?
You read my mind. I was going to say.
And are you financing any deals?
Yeah. Okay. I wanted to make sure at least we put this out there to the broker world and to Ted and Keith. We are active in buying. We aren't your REIT that has $100 million and has to place that capital and buy 10 properties a month just to buy. So we are a little more conservative, but we do close. In the 6 months that I've been here, we identified 2 properties. One is a single tenant industrial, 10-year absolute triple net leased to a private equity company where we got some financials and felt good about that tenant. Thank you to Bob Mack at Signature out of the Toledo office for firing that one our way. We'll close on that at the end of the month. The other is a redevelopment. So it's a box that we've identified in a market that we were in. We felt confident. It was a tenant that had gone vacant as a result of the pandemic. We felt confident in our ability to get it in front of a tenant and get a lease executed. So we put it under contract. We're taking that vacant box off of the developer's hands. We got the lease done, and we're closing today on it, actually. Where we will do the development. So.
Good job, Evan.
So we're looking for net lease deals. We're looking for shopping centers with 80% occupancy, something like that. We love the shadow anchored deals, and you can't find enough of it. But we love storage. Storage, 5 acres, 50,000 gross leasable, and that's Michigan, Ohio, Indiana, Kentucky. Keith, I want to see your deal just to look at it, but
okay,
we can chat about it. But and then we finance our deals. We have.
So let me say this: if you're a developer and you want to sell, Keith is amazing. How long have we known each other, Keith? Maybe 25, 30 years. Keith's an awesome person to list with. Ted's really awesome. He knows all the latest stuff. He's really technologically advanced. So both of these guys, if you're a developer of Walgreens, CVS, 7-Elevens, whatever, fast Jack in the Boxes, call Keith and call Ted, because we need supply to give to our buyers, and I want to finance those deals. So Keith, where can a developer call you and Ted, and will all 3 of you guys be going to ICSC to meet up with the developers to try to get listings? Keith.
Yeah, so Keith Sturm and my company is Upland Real Estate Group. We are located in downtown Minneapolis, and we sell properties throughout the country. And you can get a hold of me at my direct phone number, 612-376-4488. That's 612-376-4488. And my email is Keith, Keith, at upland.com. And yes, I'm looking forward to being in Las Vegas again after taking a couple of years off. So we'll see you guys in May.
Ted, are you going to, how can developers that want to list or buyers that want to buy call you?
Absolutely. So Ted Dowding, TD Commercial Group, powered by Net Lease World. My direct number is 858-999-7431. Ted at netleaseworld.com be my email address, and I will be at ICSC, and I'm really looking forward to it.
So let me just say, so I'm looking for acquisition. If you're in a 1031, you need an acquisition loan, come to us. Refinance, if you want to refinance 1-for-1 with an existing loan, kind of like I'm doing on the Walgreens deal. We've got a lot of loans that were done 5 to 10 years ago that are coming due. Love to refinance you. if you own a net lease deal or deals all cash, let's go ahead and monetize them, pull cash out, and then you can go with Ted, Keith, or if Evan's selling something, you can buy more net lease. Or if you're in a construction loan, right? You've got interest carry, you built a Walgreens or a CVS, 7-Eleven, you think rates may be going up in the the longer term, maybe time for you to start to explore rolling into longer term financing. We'd love to do that too. Right now, our rates are anywhere between 3 to 4 3/8, depending on where the property is located, the credit quality, whether we're doing a 5, 7, 10-year fixed with like a 25 to 30-year AM. We also have life company money. So if you're looking to do like a self-liquidating deal, or a hangout, like a 2020 or a 30 doing 20, we can do that. I will be at ICSC, so I'd love to meet up with you. We have the office downtown San Diego, Orange County, and Costa Mesa, Beverly Hills. We're very much relationship oriented. Call me. We'll come. We'll meet with you. We'll come up with a game plan. Collect all your documents, and then if you need a good agent like Keith or Ted, we'll plug you in with them, and we'll come up with a strategy. But you can call me on my cell phone or text me anytime, 760-803-6464, 760-803-6464, like Ted's Net Lease World. You should definitely subscribe, okay? Hit the bell, subscribe to Net Lease TV. You can go on my website. It's www.marabellafinance.com, and then click on Net Lease TV and subscribe. Hit it, subscribe. Or Google Net Lease TV. Okay, Evan, how can somebody reach you, and are you going to be at ICSC?
Sure. I'll do a quick one. My email, lyons, Lyons, at Tolson, TOLSONENT.com. TolsonENT.com. Brokers, add me to your mailing list. I want to see deals, even if it's outside of some of the criteria we talked about. I'd rather say a quick no. When we put stuff under contract, it's we're efficient, effective. Don't typically fall out of deals. And of course, I'll be at ICSC. I was at the December show, enjoyed it. It was a little more intimate, but ready to get back at it and see Ted at a pool party.
Awesome, Evan, Keith, Ted. Thanks again for being on Net Lease TV. Let's make some deals. Woo! Net Lease TV.